But these higher gold prices, a lot of people are sort of waking up and saying, okay, great, this is here to stay. That's the important thing. It's not just a spike. Gold might correct a little bit short term because it's had a great run, but people are looking for the next mine, and there aren't that many projects that are fully permitted. That's key.
Hello, you're watching Proactive. I'm joined by Condor Gold CEO Mark Child. Mark, very good to speak with you. You're out with your interim report and you highlight heightened interest in your assets in Nicaragua, given the current high gold price at the moment.
Yes, that's correct. I've just attended 2 weeks of conferences in Colorado, the Precious Metals Summit and Denver Gold Forum. I met 15 to 20 gold producers at that time. The mood at the conferences are much more positive because gold's up actually 30% since the 1st of January as we speak today. And that's meant that the gold producers' share prices are up significantly. They've got much more cash flow that's dropping through to the bottom line. And they're feeling more confident about buying their next mine, which we hope one of them will acquire, the Lanja project.
So, I mean, with gold at above $2,600 an ounce, Mark, tell us about the interest that you're seeing and the discussions you're having with interested buyers.
Well, it's revolving doors in some ways. We've got several companies under non-disclosure agreements. We've had 3 site visits to date. We've got 5 non-binding offers. In fact, I've had a 6th one has come in the last 24 hours, has come through for the project. So that's encouraging. That's a Chinese group that has put in quite a high non-binding offer. The trick to this is, of course, to negotiate, and we are doing our best for all shareholders. And the management team, particularly Jim Mellon, chairman, has 26% of the company. We've got 29-30% between us. We could have sold this before, but it would have been a giveaway. And so far, we've done the right thing, I think, by just being patient, and the gold price has gone our way, and that'll ultimately get reflected in the sale.
So, Mark, for the first time, you've also given a comparison of your studies using the gold price at different levels. How have the project economics changed due to the rising gold price?
Well, almost, and this is a frustration to our shareholders because we've been in a sale process for over 18 months. And the market, as we all know, in the short term, Mr. Market is a voting machine. And the votes that are being cast is that maybe we won't sell the project. We would rather look at it as a weighing machine, to quote Benjamin Graham, and that value will eventually come through. So the project has never been in better shape from a financial perspective. So I'll give some comparisons. Our feasibility study, which is through probable mineral reserves, has 82,000 ounces of gold a year. We did that study at $1,600 gold price. The NPVs go up about 4 times. If we use $2,400 gold, so $250 less, our IRRs go up and double. The payback halves in terms of periods. So material discount to price to NAV ratio. The EBITDA number more than doubles, importantly, to over $770 million. If we look at the next scenario, which is most likely, where we just do all open pits, we have 3 fully permitted pits for 120,000 ounces of gold a year. In that case, the NPV doubles again. Our EBITDA is over $1 billion US. The NPV is over $700 million. The IRR is over 100%. The payback 6 months. So these are extraordinary numbers. And what we're doing is we're just keeping the same pit shells in each case at lower gold prices, $850, $900 lower gold prices. And we're just changing the gold price, the content price for the gold in those exact contained pits. The third scenario is our biggest scenario of 150,000 ounces of gold per annum, which is on open pit and underground. That's extraordinary. Our NPV goes to over $900 million US, compared to the market cap today of 60 million. So our price to book is 0.1 something. Our IRRs are over 100%. The payback 6 months. So there's a complete disconnect between the project economics and the market capitalization at the moment by any matrix, but it's getting more attractive. That gives nothing for the value that we've got having bought all the land, which de-risks a project, got all the environmental permits to construct and operate, bought a SAG mill, and the fact we think there's another 5 million ounces or so on the project. So we can't sort of underestimate or understate the importance of these higher gold prices that make the project that much more attractive.
And Mark, in the meantime, land acquisition has continued at La India, hasn't it?
Yes, it's part of a de-risk, and the important thing is that we fully regularized that land. So the Attorney General's office has put all the land into our name. That's a major de-risk. It doesn't often happen in Nicaragua. And that should give comfort to any buyer.
So tell us what the current period holds in store for Condor Gold and what investors should be expecting going forward.
It's a really busy time. I'm in my 5th week on the road, so this is a hotel room we're in now. I had 2 weeks in Nicaragua, then 2 weeks on these mining conferences. I'm in Miami now. I fly down on Monday to Nicaragua again, meeting another gold producer there. So it's a question of getting these site visits through. We had a technical call last night, which was 7:30 my time to 9:30 with somebody in Australia talking to my technical team. So four of us on that call with their technical team. We've got other site visits lined up. We had one yesterday come through. That's looking at end of October coming through. We've got to finalize the dates. But these higher gold prices, a lot of people are sort of waking up and saying, okay, great, this is here to stay. That's the important thing. It's not just a spike. Gold might correct a little bit short term because it's had a great run, but people are looking for the next mine, and there aren't that many projects that are fully permitted. That's key. There are many projects out there that will never get a permit in gold, where the government lets you in 100%. There's nobody taking 30% free carried interest. And the project economics are so attractive for Langia project that it means that ultimately this project is just too valuable not to be acquired and not to be developed by an existing gold producer in our view.
Mark, I hope you'll keep us updated on any progress. Thank you very much for speaking with us today.
Thank you.
That's Condor Gold CEO Mark Child.